Yes, hello, Multi-Gen Wealth Services, friends, family, and community. My name is Craig Brown. It is Friday, April 11th, 2025. I just wanted to take a moment and follow up regarding last week's video. Got some positive feedback, and I just wanted to share another quick update. And so thank you to everyone who's wished words of encouragement. It's greatly appreciated that you're thinking of me in this period of time, but it's really about you. And I think what's important is for all of us, when we think about this time in the markets, is a week ago, the S&P 500, dislocated pretty hard to the downside. You don't see that, very often. It's, I think the analogy I've been hearing is just like a heart attack. It's a negative shock like COVID. But I also said at the time that we'd get some good news this week, and you never really know where that good news comes from. You just know it happens. And so we had a couple of pieces of good news this week. And in the end, we saw the market rally, roughly 8% higher or so. And I think that's great news. It's clearly going in the right direction, I think, on the short term. And I think on the longer or sort of intermediate term, we've got some challenges to continue to work through. And I just wanted to outline a couple of broad strokes here, if you will, on why the administration is taking the position they have, and what they hope to achieve. And I think when you think about tariffs or these trade barriers, and these trade barriers are really hard to calculate, but there are many of them out there apparently. And one of them might be, is this example that the administration uses, is that in 2014, we opened up our markets to the South Koreans to sell automobiles. In exchange, they would open up their markets to our agriculture. And so in this process, McDonald's started opening up franchises over there, and they wouldn't allow French fries to come in. And it's because they couldn't determine the origin of the potato, and that's a barrier, and it's a friction. There's same thing with automobiles in Europe. There's some challenges. Same thing in Japan, and so the administration, is taking a position, and it's quite entrenched that it's not only an economic interest. When you think about who owns stocks in our country, the top 10% own roughly 88% of all stocks. The next 40% own 12%, and the bottom 50% own debt. And that wealth divide that's occurred, and that's what the administration is trying to focus on. They would also cite data that in 2024, record number of Americans did European vacations. I know many of you did trips, and also record number of Americans went to the food bank, and it was data cited at an event my company sponsored with the Salvation Army over last winter, is data they were supporting with food bank needs. We've seen it in the local papers as well. So there's a real wealth divide that's going on here, and they cite the deindustrialization as part of the problem. Not the problem, but part of it. And when you think about some 60,000 factories, 6.5 million jobs lost in manufacturing over the last 30 years since China was entered into the WTO, that's a lot of opportunity taken away. And that's where the administration keeps coming back to of, it's not just, the American dream is not just buying, sort of low-cost stuff from overseas. It's about opportunity and upward mobility. And one piece in all of that is manufacturing. And they seem to be intent on trying to bring a lot of that home. Two, they view it really as a national security interest. When you think about going through COVID, the COVID, really, exposed a lot of weaknesses, if you will, when we told some people to stay home and some people to go to work, and those people that went to work did so under a lot of pressure, not knowing the outcomes. The impact if they got COVID directly as well. And so you think about all the first responders and the like, the grocery workers, retail grocery, really difficult situations early on in COVID, and yet had to go to work. And our inability to manufacture and create goods domestically, created a real exposure. And so the administration's intent, on trying to, redevelop that manufacturing base. I think 1970s, we were about 39% of our economy was manufacturing. Today it's something like 7%. So does it get to 10, 11, 12? I have no idea. But their intent is to bring it back and create it as another opportunity for high school graduates to go on, instead of just being investment bankers or engineers, that there's opportunities in the manufacturing space as well, and not just the other trades like electrical or plumbing, but manufacturing. And so they really view it as a critical piece, and so they have an entrenched view on it, and I continue to believe that they will stay focused on that. And so that's really their position, and so they've taken this stance. And we're seeing some countries come along. When you think about trade for the United States, think of it in zones, if you will. Canada, Mexico, key pieces to all of this. European Union. When you think Asia, think Japan, South Korea, Vietnam, and maybe Singapore. And then you have China as a standalone trading partner. And then there's other, smaller pieces outside of that. So there's like another 94 or maybe another 100 countries that do, the other 30%. But those are our biggest trading partners. And so I suspect that we'll get all of those locked down, or at least hopefully get all those locked down over the next, call it, week or two, preferably sooner rather than later. And that uncertainty off the table will take stresses out of the economy and out of the market. And I think that's the real push-pull in all of this, is this uncertainty associated with being able to run businesses and understanding the rules of the game, and allowing CFOs to do planning and investments along the way. And it's really hard when there's uncertainty as much as we have right now. And so the market has been driven by fear, not by fundamentals. Other good news we had this week was on inflation, better than expected. And as I wrote in my March newsletter, the entity Trueflation seems to be ahead of the Fed by a month or two in their data, because they're using real-time data, and is starting to show into the Fed's numbers as well. And so potentially the Fed is behind with cutting rates as well. So more good news there, because they have a lot of room to go. If inflation is coming down and this, trading gets resolved and the tariffs sort of settle out, and so the Fed understands the potential impact in the modeling of inflation into their models on the tariff figures. So again, grateful for all of you. I appreciate your patience through this process. I don't think the market's going straight up from here. I think it's going to be in a trading range for a while. 5,500 seems like a pretty significant hurdle to get over, over the next month or so. 4,800 seems like natural support. We hit that earlier this week and right above it on Friday. And so in a real fear/recession type data, that's where the market will gravitate towards, or should. And if we get things resolved and we can get above 5,500, then maybe we can continue to build from there. But I do think this is a complicated issue. I do believe the administration has an entrenched position, and it seems like this might take a few weeks, month or so to work its way through. Hopefully I'm wrong, but it seems to be a reasonable approach, or view of that. And we'll just continue to monitor and work our way through. Again, any questions, as always, please reach out. We will communicate and be advocates along the way. Take care.